Welcome back, everybody, to another Tactical Tuesdays here for Pepperstone. Today, we're talking about everything to do with jobs numbers. It is that time again. The biggest, pretty much economic news of the month is about to come, and this means that we get a lot of setups and potential opportunities afterwards as well. So today, we'll be talking about the SP 500. We'll go through the NASDAQ. We'll also go through what's happening in the currency world, the commodity space, and some of our favorites, including gold and silver, which just continue to be incredibly bullish, don't they, Tyrone? My name's Thomas Atkinson, and as always, you're joined by Tyrone. Ty, it's been a pretty good week if you're in some things, and then maybe a little bit stagnant in some of the others since we were last here 2 weeks ago, isn't it?
It certainly has, Tom, and I think your bold prediction early in the year that gold is going to hit $4,000 is getting closer and closer to fruition. Every time I look, it's up another $50. So yeah, it's very, very powerful. Look, very interesting. I think that actually those metals are doing such a big, heavy bull run, given that the indices are kind of sort of flattening out a little bit. We can see here on the SP 500 to start us out. Look, it's certainly going higher lows, but I think we're all kind of waiting for that dip. I mean, it certainly never came in September. So for the first time in 7 years, we didn't see hardly any pullback at all. But it's not exactly a strong either, is it? It doesn't look all that strong. And I think that the warning signs are probably there for us to observe, but we have to trade what we see at the moment. So while the 20 moving average is holding up and maintaining that support, we're going to respect it. But by golly gosh, if we get that lightning bolt on the daily, I think I'll start to get a little bit excited again.
Yes, I think if we move below the daily 20 as well, that's going to get quite a lot of volatility in it. So let's just kind of deep dive here into what's happened so far in the S&P, because you guys can see it's in an upward trend, and there's no doubt about that, as Tyrone mentioned. The daily 20 has been the most touched zone. So if there is a close below it, but that hits straight into demand. And you can see actually since the rally began back in April, pretty much every single touch has been 2020, 2020, 2020, and it's held or stayed right around that. Now, we've been given a bit of information over the last week, because what's happened is we've got a kind of pin bar doji candle here, and then we've got another wick here. And what that's done is it's put a bit of a line in the sand now that if the market was to turn to the downside, go underneath like a 65.50, let's say, it would pretty much be showing us that actually momentum is shifting. And as Tyra mentioned, we didn't get a sell in September. We tend to get some form of volatility that often does lead to sells in either August, September, or October. It's kind of the three main months of the year that you look for this, and it hasn't happened so far. But some weakness starting to show up, exhaustion figures. And if the market does go through here, I think that could be a signal for the market to pull back. So the first thing I wanted to mention to everyone is that the 20 moving average, which on the weekly, which is mean reversion, has never been hit this entire time since we've rallied up. So yes, it went through it, but it's never come back and pulled back to that level. And that's actually very rare. So if we have a look here on the other side, when we go back to like 2020, you'll notice it tapped it quite a few times as it was going through that bull trend. So this has definitely been a very aggressive market, which I think we're all aware of. And we are starting to see more and more signs of slight exhaustion. Although it's not, turning or anything yet, it is showing that. The other thing I want to mention on the small time frames is that, the market has, was going down a series of lower lows and lower highs, and then it kind of blitz past that. So at least on, I guess, the smaller time frames at the moment, the market actually put itself back into trying to be bullish again. So it's very difficult. I always say to people, you've got to remember with indices that the markets are more bullish than bearish, and you don't want to really go against things unless you get a stronger read. So I think from a TA basis, I think that the trend on the daily, the trend on the weekly, the trend on the monthly is still kind of bullish overall, isn't it, Ty? I mean, there's no changing that really when you look at the market.
Despite our biases, we have to trade what we see, and look, there's no question we're still seeing bullishness on nearly every time frame that you look at. And while that's happening, you just have to. I think you just have to trade with caution when you're going forward. I mean, you're not trying to predict the next big giant rally. I think you just be sensible about your take profits, and there's certainly profits to be made. I think you just have to be sensible about the approach that you're doing, knowing that we're at a tumultuous level, and volatility is only around the corner by a close. I agree with you. I think a daily close below the 20 moving average, and I think the volatility, I think the VIX will spike and then all of a sudden we'll start to see a little bit of action. So you don't want to be on the wrong end of that. So I think it's really about making sure that your expectation is in line with what the market's actually doing. And if you do that, you're going to be in and out faster than the market can whack you around the ears, Tom.
Yeah, we can see the same thing with the Nasdaq as well. Daily 20, also 24,250 kind of area. This is marking out clearly where we saw buyers previously and where we see them again. And again, a little bit of rejection last 24 hours, a little bit of overexhaustion. That kind of shows to more of a sideways or even declining market. The key is going to be, again, the 20, I think, on the S&P, though. So even if you trade the Nasdaq, that's going to be one of the keys. Well, let's go from there to something that's a little bit more interesting at the moment, which has actually been the dollar. So I want to load up the dollar index and show everybody this chart. So here's the dollar index, and it's been going against what a lot of people have been thinking. And that is, of course, that a lot of people have been saying, oh, the end of the US dollar, the end of the US dollar. That's been the news story. And as we often say, if it's in the press, it's often in the price. So in this case, what's happened is the dollar has come back up to a kind of more important area. It's actually heavily traded area, and it's reacted a little bit off this. And what that's doing is it's pretty much signaling a very important point. So it gives us quite a few markers to now mark out in our charts. The first one is around this 96.80 for the USD. Now, why this is going to be important is because, as we mentioned at the start of the show, this week is jobs numbers, guys. And the Fed has gone from saying we care about inflation and the jobs to we don't care about inflation, whatever with that, we care about the jobs. So that means that the jobs market number becomes the most important number of the month. And this actually can create quite a lot of volatility. So what would happen, Ty, in your opinion, if the market was to break underneath this 96.80 this week, post jobs numbers or even before it?
Yeah, I think that would be problematic for the dollar. There's no question about that, because I think it is looking for a reason to sell off. But in saying that, it has been very, very resilient around that level. But I tell you what, I wouldn't want to see it trading underneath there again, because that would be a breakdown of that lightning bolt that's already starting to form. And it's already busted through. As you can see, it's in a very highly traded zone right now. There's no question about that. And in order for this to go longer, it really needs to get a close above, like we've said many times, it's sort of 98.50. If it does that, it could be well and truly on a run. But it wouldn't want to be going all the way back to 96.80. I'd be very uncomfortable with that if I was looking for long opportunities on the dollar index, because it's almost like a point of no return, but it's a point that we don't want to be going to again. I think we've already been there. We've got the lightning bolt in our favor now. And just importantly, the moving average is behind us. The 20 moving average is now behind us again. I really would like to see this 98.50 to 80 level broken.
Okay, so like a bullish position where it goes through 98.50, 98.70, something like that. Then if that happens, it keeps kind of finding bullish out.
I think if it does that, I think it's going back up to parity. It'll go to the 100 and probably 150 at that point. Not 50, that is.
Yeah. Okay. So I guess this week then, if we're looking at dollars, I tend to think if it goes underneath here, because it's at what I would call equilibrium right now. So basically it's at fair value for whatever the market's current condition. So if it chooses to go down here, probably further weakness looks on the card. And if it chooses to go above here, then all of a sudden the movement to this 100, this parity level becomes more kind of an opportunity. And that then opens up, of course, well, okay, let's have a look now at the euro and see if that agrees. And usually when people trade the dollar, they look at the euro or the Aussie or the pound or something like that versus the US dollar, and it generally gives very similar kind of vibes. So you can see over here, the euro is very similar. It's rejected. It actually went to a new high and then rejected that. And you can kind of see there's this huge fight between the two sides in terms of bullish positions and sellers, because you've got here so many closes all at the same price, yet a lot of wicks on either side. This is telling us that this is a very heavily traded zone. It's clearly, you don't have to put a volume profile on that to see that there's a kind of trade through that level. So when we then go to the daily, you can again see here the market managed to hold pretty well to around this most traded area in here, and it's still holding these more significant 116 zeros. So if we get underneath 1.16, that's going to be probably equal or equivalent to that 98 kind of 70 zone. and then that would mean stronger dollar, weaker euro. But for the stronger euro to occur, everyone can probably see it, 1.18 kind of 2 from the TA basis. That happens, then all of a sudden you're really strengthening that next move in terms of euro. And the good thing with the euro is we are going into charted territory. So if we have a look on the left-hand side, it opens up some pretty significant runways, doesn't it, Ty? Especially if we get through this area here in the future. This could be a pretty big move should that happen.
And that would truly spell quite a bit of pain for the US dollar. There's no question about that, because that's probably a 94 or 93 US dollar at that point at a 122 on the euro. And I don't think the administration will be very happy about that.
And you guys will see as well on the weekly here, the 1.16 level is also the weekly 20. So again, if we then go back and have a look at some of the markets here, you'll notice that you get this very heavy touching on both ends, particularly around the 20 moving average. Some very good levels for the euro in the future in terms of where it could go. We've also seen, of course, two other things going on, guys, which is bullish gold and bullish silver. Look, it's very difficult to get involved in these trades unless you're on very small timeframes. But I think the important thing is what we've been talking about. We actually have spoken about this years now in the channel and how we've been bullish on this technically and from the macro space as well. But the key here is I think you don't want to fight trends. You know, a lot of people have been trying to short gold, especially over the last maybe $50 to $100 an ounce. And it's just not good to go against those trends. So what's the daily doing? Bullish. What's the weekly doing? It's bullish. What's the monthly doing? It's bullish. And if you actually look at the possibility that this is a pennant, then that's calling for that 4,000 to 4,200 level, which is obviously higher than it is right now, but not that much higher. I mean, we're talking only $150 an ounce just to hit 4K. So how could you look at this coming into this event? Well, basically, you're looking for these types of things to occur. You're looking for pits, which is basically a pullback in time, that are then broken towards the upward side. That's probably one of the best ways of trading momentum stock, momentum commodities, whatever. That is that if we saw this, let's say we get high, a low, get a slightly higher high here, pretty equal low, and then all of a sudden it goes and it takes that high out. These actually aren't too bad in terms of momentum trades with stops below the low. One of my favorite things to do here is if it does something like this, to then take that trade and take it to, basically a fib extension of some kind. So if you're not familiar with fib extensions on the Pepperstone YouTube channel, which hopefully you guys are either watching here live or watching there, then make sure to subscribe and then go through and have a look at the Fibonacci videos we've done for Pepperstone over the last couple of years, and you'll see what we mean. But an extension is a very good way of taking these ones. I do not see any weakness here on gold at the moment. We've got overbought RSI to the max on monthly, which eventually brings vol, but that could be at $4,000. Who knows? So do you see any weakness in this chart?
No. And I don't see any instruments around it that would even make it look weak, to be honest. I think that if we see a dollar strengthening, I don't think it's going to affect gold. I think if we see a dollar weakening, I don't think it's going to affect gold. If we see the indices sell off, I don't think it's going to affect gold. In fact, I think it might make gold go higher. So it just doesn't seem to have any chinks in its armor at the moment.
Yeah, it's just very, very strong in terms of the metals, guys. Silver is even stronger at the moment. I would not have thought that this would be this high in only a few weeks. We're about to attempt to do the impossible for silver for, since the 1970s. Which is potentially go past a $50 an ounce kind of a bracket. And it's moved from 43 to 47 very quickly. So this has been an exceptionally good run. Again, minor, the trend is up. The trend is up. I wouldn't try to short it. I think you've just got to be looking on smaller timeframes towards being in the direction of whatever your system is. And again, it comes back to pretty much just looking for pits or looking for turns in the direction of trend. And that's been the most successful way of doing it. It's actually a trade down here. Seems like an eon ago, but it was actually only about 2 weeks ago when we were talking. And I think we're actually mentioning it here on the Tactical Tuesdays, Ty, and talking about how this actually was quite a bullish setup for silver. And it certainly was. It turned out to be even better than probably anyone expected at the time. But This is the type of thing that you're looking for. So you're looking for this type of thing, and you have to kind of just keep going in the direction of trend. There's always that rule of saying is this is not a dull market right now, but don't short a dull market, because have a look over here. That was a very dull market, and look at what's eventuated. And what a dull market is making a series of higher highs and higher lows, but it's doing it in a very tight space. And in essence, it's kind of like a coiled market that every time a seller comes in, what can't they do? They can't sell it down. They can't pressure it down because everyone suddenly wants to buy back in and buy the price. So you think about what a dull market really is, and then you'll go, yeah, I probably don't want to go against those types of things. So gold, silver, very, very strong on the charts. The other ones, of course, that have been happening in more recent times has been the rumors and thoughts around oil. Now, oil is probably one of the tougher trades out there because it is so geopolitical and there's so many other things that are going on. It really tried to change full trend in terms of the small time frames this week to at least get a daily up, and that was around that 66. Now, it's rejected this level. It's come back down. So in this case, coming into something like non-farm payrolls, there's probably a lot at stake here for this particular pair. And what I'm noticing is at the time of when we're recording this and when we're doing this with you guys live, that we are at that most traded area. So really, we're at that zone where a decision may be made to pick this back up. If that does happen, and then we break through 66 in the future, that's going to be very, very bullish, I think, Ty. And I think all of a sudden, oil is looking a lot better into potentially 70 a barrel. Obviously, if oil drops this 61, that's going to be very bearish. So 61.50, no good. And we are stuck within this zone, trading at literally the most traded zone. Do you have a direction on oil yet that you feel, or are you feeling incredibly neutral?
Incredibly neutral, but I agree with your sentiments that if we get a break above that sideways zone, I think it's got potential 72.50. Actually, I think it might even go a bit further. And I agree. I think 62 is the line in the sand for me. If it breaks and closes below 62, we're probably in a little bit of trouble. But it's been very good. It has actually been very good trading inside this channel for scalping. No question about that. It's respected TA levels very, very well. It's been a bit of a bonanza, actually, if you've been trading the boundaries. But I think something it seems to be brewing, and I think that I would prefer the long side break, because I think that gives us more stability in a price that we can actually chase, as opposed to the downward side, which we know is below what really is fair value. So I think if it does break lower, there's always that expectation that it's going to eventually reject very, very aggressively. Whereas if it breaks up higher, that's probably half expected, and then we're going to get a trend and we're going to get more out of it, which is obviously the key when we're looking for trades. We want trades that are going to give us a decent amount of meat, and so a break higher would be definitely more ideal than a break lower, but we trade what we see. So we're certainly on the lookout for both.
And this is one of those classic case scenarios, guys, where we're trapped for a while, we're in a pit. So what's that doing? It's coiling, it's building up the pressure towards a decent break. What's a catalyst towards one of those things? Then, of course, generally it is something like non-farm payrolls. So this is one of those ones that could be a post non-farm payroll breakout, weekly closes, all of a sudden, we're at whatever next level it is. Hard to pick the direction right now. There are some signs that improvements are starting to come through on particularly the markets like the stocks for those particular positions. But I always like to, I just thought I'd come over here and show everyone, I always like to come and look at UK oil as well, which is Brent. And we like to look at Brent as well, because is that doing something that's different from the US oil? And the answer at the moment is, of course, no. But if it does break to the upside, then, of course, that could be quite strong for it. So I like the possibilities. I think this is a possibilities type of position, and something that I'd be looking at, especially post non-farm payrolls and the stuff that's going on this week. Well, from oil, Ty, I think it's time to talk about Bitcoin, because it just did something quite good over the last 24 hours, which was to break through the 114,000 barrier and actually put a daily close in. So this has been weak for a while. It's actually been doing not much since July. So you could have got the same price, and this is kind of almost hard to believe when you think about it, considering how the wet year's gone so far, that you could get almost the same price as you got in May all the way over here in September. Well, you could have got the same price. it's been weak. It's then shown signs that we've talked about over the last couple of weeks on the show of bullishness. It then pulled back a little bit deeper than you would have hoped, because this is a bit deeper, and then it's gone to a higher high. Now, I'll show you the weekly here, because, of course, the weekly's got that interesting situation on it. So the reason I bring this up is this one here, guys, 20 weekly. And then, of course, there are a couple of rejections here as well. Do you think it's done enough at 114,000, Ty, to actually say, you know what, maybe the bulls are back on this pair again?
Oh, yeah, no, not really. I think I'd like to see it above 116.5, to be honest. That would convince me a little bit more. I think it's at a precarious zone right now. Look, it's had a very good run, but it came down in a bit of a hurry. It's coming up in just as a quicker hurry. I do like that level at 16,500. I think if it got to there and broke through there, then I think we're probably looking at low 20s again, or 120s, and I think that would be justified then. But I think there's significant headwind just in front of it, and for me to prove itself, it needs to break past there, and I don't like it as a rule when we see candles like this on the 4 hour effectively just go up in a straight line, because quite often they come down just as fast. So if we see a bit of consolidation just under 116, maybe between the 114, 800 and 116 level, and then it breaks through, that would probably give us a little bit more confidence for a break up. But I think I agree with you that the next break up is probably past the 118. I would have thought.
Yeah, I think 118 plus would be probably an all-time high at this point, the way it looks like it. To me, the 114 is pretty important. I'd say it's the first major step of really seeing this sell-off, which I expected to probably occur, to then be followed by bullishness. And I kind of like it. I see what you're saying with 116.5 as well. Like, of course, I just put up here so everyone can see it. This is a very heavily traded zone, so it's obviously an important area to go through. And there could also be a fierce pullback before rallying up. But to me, this is definitely a chart now that looks more bullish than bearish. And it started to get a little bit more neutral when we were down here, or even possibly negative, because it was starting to come down quite ferociously. So to see a bid come in, and I'm sure once I look underneath the hood here, there's probably going to be a bunch of fairly large transactions that have gone through over the last 24 hours. That's good news. And it kind of gets better when you look at Ethereum as well, because Ethereum has broken through, or it's trying to break through this 42.20, which is the zone that I've been looking for Ethereum to do, because Ethereum, I believe, probably stop-loss hunted many people this week. And you'll like this level too, Ty, if we get above it, because of those two moving averages, 2050. So all of a sudden, we've gone from being neutralized in a bullish trend, so obviously bullish, and then it's gone weaker, which definitely starts to get shorters in. And then we push through this level. That's suddenly going to really bring in a lot more squeeze capability, isn't it? So this is a very important level. I think if this finds further bullishness, it looks much better.
Yeah, 100%. Yeah, no, I totally agree with those levels.
Yeah, so some really good potential there as well, setting up this week, and even starting to show signs of life in the cryptoverse. So some nice stuff there, guys, and some decent moves across the board. We always do a quick check on some of the world indices. One of our favorites in the last year and a half, I'd say, has probably been China, and the reason is mostly liquidity and also good trend. So if we have a look here on the weekly, you'll see it's been very, very strong. One of the levels that we continue to maintain is a pretty interesting zone moving forward, and especially since we have a higher high now. Going to be this daily 50. This has been an incredible level we've spoken about several times, Ty. And at the moment, I feel like it feels kind of strong just even here. It's got a little double bottom in the direction of trend. Jack Ma's back out talking about stuff. I didn't see him for a while, so he's back chilling. And the cool thing is, I guess, you're seeing a lot of their tech stocks that have been down starting to find a lot more bullish action as well. So is this a good sign? It's a bit of basically a double bottom in the direction of trend. You like that one?
I do. No, I do. And I think even a little pullback back to that neckline on that double bottom wouldn't be a bad thing either. I think that, I think that would be quite okay, to be honest. And it's one of the ones, Yeah, I think this is one of the leading indices. It's probably lagging some of the big ones, and this might be a beneficiary of weakness across the globe. Really, I don't think that would actually hurt it, to be honest.
Yeah. Well, this one's driven by internal liquidity as well. So the central bank over there is kind of just like making liquidity available, and that's leading into some bullish action. Some other storylines that have been pretty interesting in the last couple of weeks have been the Tesla move, which I think is probably a really good just rule here in general, guys, of why you don't want to short markets that are slightly making higher highs and higher lows, maybe more dull. And more recently, heaps of people trying to short this. Now, anyone in the chat, you guys can say it. What does that look like? That does not look like a market that I want to be going against, yeah? No. We don't want to do that. I used to make this mistake when I was first in trading and investing a long time ago. And it was that I thought, oh, surely it's too expensive. I mean, who's for you to say or for me to say or anyone that it's too expensive? And this is a series of just market that keeps, whenever it goes down, it just keeps getting bought, and it's doing that exact thing like a dull market would. So it is approaching a very important area, which is 450. It's a big option level as well in the markets. So is it dull? Yes. Do you want to go against it? Personally, I wouldn't want to. It's just if you look through all of those types of charts across time, you're generally not going to find stuff. I probably don't have too many thoughts on Tesla, but I thought it's a great case study for people to learn off.
Actually, I think I'm more interested in Elon Musk than I am in Tesla, and we know that he is going to save the planet when the Atlas comet approaches. We're 2 weeks closer to the end of the world, according to all the scientists, like we were talking about a few weeks ago, Thomas. And the Atlas, the alien one is 2 weeks closer. And I think Elon's going to save the world with his enterprises, and Tesla is just one of them. So we're looking forward to seeing how SpaceX handles our demise.
Well, hopefully it's not. Hopefully it's not. We have to be able to trade markets time. We don't want the alien comet to get us. Okay, here we go. Craig has a good comment. He says it's a classic afterpay, too expensive, and therefore I wasn't going to buy it back in the day. And then obviously Afterpay went on to be one of the more probably more successful fintech style Australian businesses, getting bought out at was it $30 billion or something like that. So yeah, that's a classic one, Craig. Absolutely, you're totally on top when you say that. It's a good case study as well. Speaking of possibly the most important chart, we've kind of left the best here to the end of the show is to talk about this Nvidia position, because this Nvidia position has done not too much since August. And semiconductors are actually broken to the upside, while Nvidia has been down, up, down, up, down, up. And what I'm seeing across the board is there's a lot of people that are trying to upgrade Nvidia, and a lot of people that are speculating on how much it's worth. Now, we're not here to speculate on that price, but what I can say is that this market trend is currently bullish on daily, weekly, monthly. And I can also say that there is clearly a bit of resistance around this 185 level. So to get this market to go back up, do you think we need Nvidia above 185, Ty? I mean, this is the leader of the market for arguably this whole bull run since 22. What do you think about this level? Is this 185? Could this break through a non-farm payroll jobs number?
Yeah, it could, but I think that the calls are probably are far more important. I think this is not one of the witching event, is it, this week? No, like I would be more. I'd be more focused on that probably than the job numbers for Nvidia. I agree. I think it's going to break 185, but I think if it does, it might see a significant run up. I'm not so sure it's just going to sort of tickle over there. I think it's been held here for a while, but it's held here for a little bit of force. It doesn't look like it's struggling.
No.
It still looks strong, even though it hasn't gone higher. Like it's just making little signs down there that if we do see a significant, close above that 185, even with a daily, we might just see a continuation, and now all of a sudden it might be at 200. And I don't think anybody would be surprised by that, actually. It doesn't look like a sideways. A lot of the other indices we were looking at, yes, they've hit all-time highs and they're kind of teetering out a little bit and showing a bit of weakness. This is not necessarily showing weakness. actually, like I say, it looks kind of the nuts and bolts from underneath. They look pretty strong, actually.
Yeah, I think this looks pretty decent. You've got an island reversal down here. Go through 185, 200 might just be the beginning. The thing is that this stock used to be valued about 43 times forward earnings. Now it's trading at about 20 something, high 20s. So people are estimating that should go back there. But the thing is that the last earnings report showed slowdown in growth. So this is all that's the fundamental side. The question is, what does the market really want to do before the next earnings? Do they want to start pushing it up? And if that happens, and catalyst could be non-farm payrolls. Remember, news is an excuse to catalyze in price. Then 185 breakout could significantly bring in something like you said, which is $200. So there's clearly a lot of opportunity here this week, guys. I mean, obviously the gold silver train continues on, which we've been talking about. The indices have started to slow a little bit and find some breather, but they're still all bullish. Nothing really changes there. Daily 20 is the one to watch. And then, of course, we've got Bitcoin and Ethereum starting to really show signs of this doldrums recently starting to turn around as well. And then we've got oil very trapped along with Nvidia that are both in very big coil ranges, which often are broken through news. So plenty of stuff. Hope you enjoyed today's show. And, of course, make sure to subscribe down below. Make sure to follow and also sign up for the live events so you can come and ask questions. And it's been a pleasure to have you. So thank you so much for joining us. And we hope you do well this week. And obviously, non-farm payrolls bring some further opportunity. Ty, do you have any last comments to say to anyone?
No, I think again, we always give this warning, especially when the markets are at these levels, but trade with caution and trade sensibly with your expectations in check for your scalping. Because I think it's really, really important in this sort of environment, and keep yourselves safe. So thank you very much. And we look forward to seeing you again in 2 weeks' time.
Thanks so much, guys. Bye for now. See ya.